financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz. It's December 18th, 2017. Well, I don't need to remind you that time is running out on 2017, but perhaps the gold markets or precious metal markets are coming back. Well, everybody's only been talking about Bitcoin so far, but we've got a new tax plan on the horizon. As always, just to email us, be part of the show at kl@kerrylutz.com and use our Twitter feed at Kerry Lutz. So got this tax plan. It's almost certainly going to be passed. Is it going to make a difference? And should you care about it at all? Well, John Rubino, you are with us now. DollarCollapse.com. Happy Monday, John.
Hey, Kerry. Yeah, interesting timing here. Corporate profits are at record levels nominally and as a percent of GDP. In other words, corporations are making more money compared to the rest of us than ever before, and we get a big corporate tax cut. This is sort of a Republican paradise in a lot of ways. You know, they dream of stuff like this. No matter what the rest of the world is doing, cutting taxes on people who are already making lots of money. So it's interesting that it happened. And very interesting from the point of view of what it means politically going forward, because it really has to rock the economy. You know, we have to have good growth for the next few years, or the opponents of the people who passed the tax bill will have this cudgel. You know, they'll have an amazing political weapon to run on in the next couple of elections. And, you know, it's hard for me to believe that in a world where corporate profits are already at record levels, that any kind of a tax cut generates any kind of positive behavior from at least big companies. You know, the small ones, as you mentioned when we were off the air, might behave differently than big corporations. But we know now that big companies, when they get any extra cash, they just buy back their own stock or they buy another company. And those activities don't create new jobs. They do increase share prices, which in a really indirect way might lead to higher employment. But mostly they help Wall Street, but not Main Street. So it's hard to believe that big companies are going to all of a sudden start building factories at the very end of a business cycle, which they know there's been an expansion for 6 or 7 years now. And that it's more likely that 2 years from now, their sales will be lower rather than higher, just based on past history. So it's hard to picture these guys going out and just building new greenfield factories everywhere with all this new money. More than likely, they'll go buy out their competitors, or they'll increase their dividends, or they'll buy back their shares, which basically enrich they themselves. You know, it makes the guys making that decision richer, but hardly anybody else. So I don't know. It's that the stock market is really excited by this, I guess, kind of makes sense, since there might be a huge amount of share repurchase activity in the year ahead. Yeah. But it doesn't seem like the greatest thing that we could have done at this point, compared to, for instance, paying off debt or doing any number of other things, maybe from a regulatory standpoint, that makes the world or makes the U.S. economy operate more efficiently. So we'll see. But it just seems like we're at the end of this particular road. And no matter what we do, we're still at the end of the road. You know, there are no policy fixes for a society that's taken on debt of this magnitude, and in a world where everybody else has done the same thing. So yeah, you know, we'll have money flowing in from terrified people in other countries, which will be a big help. But I don't know. We'll see if it actually adds up to anything positive, or if what's going to happen because of all this debt happens anyhow, regardless of our tax code.
Well, I would make a couple of observations here. All right. Number one is people, high earners in blue states, or for the most part, blue states, high tax states. It's kind of synonymous, but there are some red states that are high tax as well, are going to get absolutely decimated by this. So you've seen the top tax rate is cut from 39.6 to 37%, 2.6% savings. But the state and local tax deductibility has gone from infinite down to 10,000. So if you have your average New York attorney living hand to mouth on $500,000 a year, I know it sounds absurd, but trust me, it's so. He's got 2 kids, who lives in a leafy suburb with good schools. This is most of middle America in the blue states. He makes $500,000 a year right now. Before we consider what happens, $500,000 times 2.6% is, what is that? $13,000 plus the other $13,000 that. So he's saving $13,000 and he's getting a deduction of $10,000, which after taxes is worth $5,000 in tax savings. So he's get $18,000 here, right? That we're looking at. Whereas the average New Yorker, he's paying, if he lives in Manhattan or you're in California and any other number of states, you're paying 10% state income tax. 10% state income tax, that's $50,000 on that $500,000 that you're earning. So, it's a real problem for these guys because it's going to cost them $20,000, $30,000 a year more. So what could very well happen here, John, is these people say, hey, what do I need to have this house for? It's not really a great write-off. I'm just going to rent, because rentals of luxury homes, high-end homes, are much cheaper actually than when you look at low-end homes, because a low-end house, if you rent it, say it goes for $120,000, its selling price, you'll pay somewhere around $1,200 to $1,500 per month for that. But a house that's worth $1 million, you're going to pay probably, say about $6,000 a month, depending upon the market, because they trade at a discount to because there's just not the demand for luxury housing rentals that there is for middle-class housing, because most people who want to be in $1 million house will buy it. So my point is, these people are going to flood out of their homes and downsize or rent very quickly. It's going to happen. And that's an unintended consequence. I disagree with you on the point of smaller businesses are the engine of growth. We always hear that. So the smaller publicly traded companies and the small business people, solopreneurs, et cetera, are definitely getting a major savings here through the cut of the effective tax rate to 21% on the corporate side. And I think it's 21% up to $330,000 or $315,000 for pass-throughs. So those people are definitely going to have more money in their pocket, and they're probably going to reinvest it. Bigger companies, I think this bill is largely neutral, other than the ability to repatriate and then pay taxes on where you earn the money going forward.
Yeah, we'll see what small businesses do. And they have had a harder time of it than big corporations because it's harder for them to attract capital. Mm-hmm. Whereas big companies can borrow for next to nothing. And with that kind of freedom, they can do a lot of fun stuff from the point of view of pushing up their stock price and, increasing year-end bonuses and stuff like that. So, yeah, we'll see what small businesses do. But still, we are at the end of a cycle. We've taken on insane amounts of debt for 8 straight years right now, or actually for 35 or 40 straight years. But the big parabolic burst has come most recently. And it's really hard to kind of push on that string. Once you've taken on a certain amount of debt, nothing works well anymore. And we're in that territory. So I'm skeptical of any kind of change that doesn't involve somehow getting rid of 2/3 of our debt. And so, we will see. But I think it's going to be hard for the system to go back to, say, a 1960s style wealth creation process where you borrow $1 and you invest it and you get $1 of new GDP. Those days are just over. So for the government now to be borrowing to fund this tax plan, in large part offsets any benefits from the tax plan, I think, because debt is becoming so toxic around the world. But, we'll see. In the meantime, the thing with state and local taxes is actually pretty funny because this has been on the Republican wish list forever. They've been wanting to punish high tax states forever because those guys don't vote Republican. Those are Democrat states, and now they get to do something that's really seriously painful for California tech entrepreneurs who backed Hillary Clinton and New York liberals and all the people that the Republicans have never liked. and have always felt, a rivalry with. And now they get to strike a blow for low tax states around the world and make it harder for people in Connecticut and New York to live. So they're doing that for fun.
There's a good policy argument for it, though, John.
Yeah, but it's
the rest of the country, but the rest of the country subsidizes them because they're able. Hey, and I was the beneficiary of it for a long, long time because you're able to deduct the state and local taxes, and when you're in a 39.6% tax bracket, for every $1,000 that you deduct, you're saving $400. So that's a subsidy that comes from the whole rest of the country. So really, there shouldn't be any deductions, and we should just have low rates. I mean, get rid of it all.
Okay, and I totally agree with you there. The libertarian tax system is, to the extent that it exists at all, has a very low rate that applies to everybody and no deductions. Clean and simple. You kind of know what the issue is. You know what your number is going forward, and you don't have these almost annual tax reform policy programs that happen really just to extort money from the people who get big tax benefits, right? If you've got a loophole and the government announces that they're going to change the tax code to simplify it by closing loopholes, you got to send your lobbyists in there to bribe the guy who is the swing vote to keep your loophole. And so this generates lots of money for the re-election campaigns of the tax writing legislators. Mm-hmm. And this time was no exception. I'm sure they made a fortune.
Yeah, that's the
by
game.
Dangling all these different things out there and saying, okay, we could cut this to zero or we could cut it in half. You decide, tell us how much you're going to donate to my campaign, and I'll decide whether to do one or the other. But there are obviously policy reasons for doing away with the deductibility of state and local taxes. But, don't kid yourself about why they're doing it, really. They're doing it because it's fun. They have the power to do something mean to their enemies. And so they're doing that. And that's probably their favorite part. Well, corporate tax cuts are also a lot of fun for Republicans. And so they've got a couple of things that they've wanted to do for a long time that they're going to get to do here. Mm-hmm. And, it's no different when the Democrats are in charge. They'll find ways to make life hard for capital. They would happily raise the top marginal income tax rate, raise corporate tax rates, because not so much for policy reasons, as because it hurts people they don't like. And I think that's a pathology. That's a sign that that we have big underlying problems when the tax code becomes basically a weapon.
Yeah, a tool of retribution.
Yeah, exactly. Whoever's in power gets to use it against their enemies. And they're looking at, that first and then rationalizing it with policy arguments to sell it. So I don't know. I'm kind of cynical about the political process in the U.S. now, just because we've made mistakes for such a long time and we've done things that are so obviously wrong for such a long time that anything we do now seems like it has to be seen through the prism of corruption. In other words, what bad motivation is driving this process? And I think you can always find something when you look, these days at least. Yeah.
Well, that's for sure. And no doubt that's part of it. I mean, really, what they should have done is just started with a blank slate and just said, we're rewriting this thing from the ground up. And the purpose is to effectuate the lowest possible tax levels across the board for everybody. And that would be the proper way to fix this monstrosity of a tax code. Now they just make it more complicated again.
Yeah. And see, that's a post-crash process. Like when the system just falls apart and it's completely discredited, then you can have the debate, with a blank sheet of paper and say, all right, now if we were going to design something that is going to work for the next 100 years, and accepting that what has worked for the past 100 years has failed miserably and we can just start over, what would we have? What kind of a system would we have? What would our money be? Would it be, backed by a commodity like gold? Would it be a cryptocurrency / fiat currency run by the government? What would it be in the ideal world? Because the old money didn't work. The old tax system didn't work. And we can now replace it with something that might work. That's going to be fascinating. That's going to be a really fun debate. And, maybe it happens, assuming we're not in a global thermonuclear war at the same time, which is a pretty big if in this world. But, if we're just having a financial crisis that we're free to debate, then that's going to be fun, because there are a lot of ideas that might work going forward. I think a lot of libertarians would say, let's just go back to the structure that was put in place with the Constitution. Limit the power of the central government to specific things. Enumerate the powers of the government, and then let states be free otherwise to experiment and compete. And we see what ideas work and let those ideas spread. We'll have competition in the political realm instead of one size fits all policies for everything, and sound money. That's an attractive idea, and it's impossible right now, but it might become possible when the stuff that we're doing now clearly fails, which it will. Over the next decade, the structures that we've set up over the previous century and that have evolved into these really dysfunctional things that don't really help anybody except the guys who have the levers of power, except the 1%. Those things will fail. And then we'll get a chance to see what we put in its place. And I'm really looking forward to that, because that'll coincide with being optimistic about investing. Stocks will be so cheap that there will actually be value out there that you can look at, and new companies and new technologies. So I'm really looking forward to hanging on till that happens, and then taking the optimistic side of some arguments for a change.
Yeah. Well, you might very well be right. Hey, getting over to the Bitcoin cryptocurrency, because you mentioned it, there was a company that closed its last Thursday, its IPO at $5.38. It acquired a company called Ziddu, Ziddu, a blockchain solutions provider, whatever that means. And they specialize in commodity trading, alternative risk transfer, and carry trade financing services. And they're also going to do like cryptocurrency loans and all sorts of wonderful things. So it opened at $5.38, and in 3 days, it's up to $44.80. Why didn't we buy that one, John?
Gary, the real question is, why don't you change the name of your website to Financial Survival Blockchain Network?
Yeah, I never thought of that.
And watch your traffic quintuple that week, and then go public. But, this, for people of a certain age, this is extremely familiar. Because this is the .com thing all over again, psychologically. I'm not saying Bitcoin crashes this week like the .coms did in 2000, but I'm saying this has the same feel. I actually had a stock back in maybe 1998 that was this, weird little conglomerate that always had a great idea but never quite made it. The stock was very cheap, but they put a .com on their name and quintupled on a Friday afternoon. And at the time I had like an $80,000 embedded profit in this little thing just because they changed their name to .com, and then I didn't sell it, and it went back down right away.
Yeah, well, that was your mistake.
That's kind of what's happening with the blockchain thing now, Mm-hmm. Anybody who's associated with it suddenly sees a torrent of cash from people who just love the idea, and aren't discriminating. And when people stop discriminating, that's one of the signs of a bubble top. So we'll see if that's the case this time around.
I'm going to call it the Blockchain Survival Network. How to survive your
I like that.
Your addiction with the blockchain, with cryptocurrencies. What do you think? We on to something?
I like it. Well, but if you sound negative about the blockchain, though, Carrie, can you imagine the comments you're going to get on your articles and stuff? Hey,
just as long as they read it.
That's going to be a lot of work sorting through the trolls.
Yeah, just as long as they read it. That's all that matters, It's all just clickbait. It's the ultimate clickbait.
Yeah, but just don't publish your address anyway.
No. I know what's happened to people who've been on the show who've given up metals and are now like all in on blockchain, and the hate that comes through, you can't even imagine. They're just really nasty. So hey, well, we'll just have to watch and see what happens. Doing an article that it's all about the dopamine. It's like people don't really care about making money, John. Yeah, you want to make money, but what you really care about is that high when you're making money that you totally don't deserve to make. It's like when you're on a roll at the dice table and you go for 25, 30 minutes and you make $40,000, $50,000 because you keep upping your bet. And if you're smart, you walk away before the 7 comes up, or you're taking money off the table so you're not letting everything ride. But it's the dopamine. You get this high, and it's the same thing with cryptocurrencies. It was the same thing with the .com, same thing with gold and silver in 2011, and you'd wake up and gold would go up $100 in a day. It's exactly the same thing. People need to get that dopamine hit, and it doesn't matter where they get it from. And, I think people that rob banks get that dopamine, the adrenaline goes through them, and, they get this charge. You just get, it's otherworldly, it's transformative, but it's very temporary, and you keep needing more and more of it to take you to the same place. So it's a failed investment strategy. Dopamine is not an investment strategy, right?
Well, in the end, it turns out to be dangerous, but it's a wild ride while you're, while you are riding a bubble.
Feels so good.
It's one of the greatest feelings in the world, yeah. And there are people who ride bubbles to the right point, get out, and then turn around and short that bubble, and that is a sign of genius. It's very hard to do.
Yeah.
It's hard to do to the point that it really takes a genius to be able to do it, because you've got to confront your own human emotions. Basic instinct is telling you, don't do what you're thinking of doing here. Don't sell and then short. No, this thing that's going to go up forever. But the people who do it make epic fortunes. And in every cycle, a handful of people do it. The Big Short, the movie The Big Short, was about guys who figured out the housing bubble when nobody else got it. And they placed big, life-threatening bets. These were existentially big bets, these guys, at least the ones in the movies, placed, and watched them go the wrong way for a while, but stuck with them and ended up making just, insane fortunes, billions of dollars in a lot of cases. And that's, that's something that happens in every cycle with every bubble, but it's just really hard to do. To call the top of a bubble in a way that makes trading it profitable is one of the hardest things in the investing world. And that's why so few people get it right. But you know what? We are in another bubble now. And the question is, what is the bubble? Is it a government bond bubble? Is it an equities bubble? Is it a real estate bubble? Is it a Bitcoin bubble? And it makes a big difference which of those things you choose to sell out of and then bet against, because they won't all move together. They'll move sequentially. One of these bubbles will pop, and then another one will soar while the first bubble is popping, and then that bubble will pop. So this is an especially hard one to get right. But you know what? If you get it right, it's going to be a phenomenal few years. There's just going to be a handful of guys we don't know now, who we've never heard of, who are going to be household names a decade hence because they got this right.
Yeah, the Paulsons of the next Big Short. And look, I think it's harder to play Bitcoin to short it because those futures are not for the faint of heart, and you'd have to be doing spreads in those futures, and they're going to be really expensive to do spreads. Cost prohibitive in Bitcoin. I mean, how can they not be, John? So that's a real difficult way. But on the stock market, on the other hand, there's so many ways to play its eventual unwinding that they're expensive, but it's the Nassim Taleb Black Swan author method. You're making huge bets very cheaply, continually, and eventually you hit it. And it doesn't even have to be the big crash. You hit it because there will one day again in the stock markets be a correction. It's going to happen. Even if it only goes down 20%, a correction could be as big as 30%. A quick intermediate downturn could wipe out 30% in a month. In fact, that's one of the ways that you can tell that it is intermediate, because it's very quick and violent. So there will be ways to play the market, but you have to be very careful, and you have to have a huge payoff for a very low investment, or low speculation. That's really the key to making it when the worm turns.
Well, when it finally does turn, though, Kerry, there's a long period of bad news out there, and a lot of short candidates like that. That's 2009, 2010, right? When you had the banks had already gone down, for instance, and then they went down way more. And so if you figure out that this is the big one. This isn't a squiggle anymore, that this is the crash that you've been watching since this bubble started blowing up 5 years ago. And you ride it all the way down. That's where the life-changing money comes from.
Yes. Yeah. Hey, you write it down as much as you can, but be careful of the dopamine. The dopamine, you get that. It stimulates the pleasure center. That's what makes it work. And man, you get that feel, boy, and you're on top of the world. It's euphoric.
It works for short selling as well as being long too. When something starts to fall, you start thinking, oh, this is a bankruptcy candidate. It's going to zero, and that's rarely the case.
Rarely, but
it feels like it.
Sometimes, hey, if there's a major shift here in the market, we're going to see that happen again, because people, so many people now, John, alive or on Wall Street, never seen a bear market. They got in after 2009 and they think that the stock market just goes up, right? Isn't that its purpose? So,
well, in every bubble, there's a generation of kids who are the really aggressive traders because, like you said, they don't know anything different than something going up day after day, week after week, month after month. And so they don't bother hedging their bets. And while it's going up, they look like geniuses, So there's a new generation of young traders who come along who eventually learn the lesson. But while they're riding their generational wave, they look and feel like geniuses. So we could have been us there, but for the grace of God, if we timed it wrong in our own careers. But, it's hard to feel sorry for these guys when it happens.
Not at all. It's like they start believing their own myth. And it's a bad thing. Hey, anyway, that's it for this week. I guess we'll be next. What is it? Next Monday is Christmas. So we'll connect sometime after that during the week, John, just to see what happens and to do a yearly wrap-up show, I think is in order here, because you need to understand what happened this year to understand or have an insight or recognize what's going to happen next year. I think it's really important that we do that. So sometime next week, and we'll work out the details. We'll be back on for what I guess will be the last show of the year. And anyway, find John's work as always at dollarcollapse.com and find us at financialsurvivalnetwork.com. Make sure you subscribe. I'm going to be doing a really good article about dopamine this week here, because it's the root cause of all financial bubbles, and it's something you really need to think about. Anyway, be part of the show. Write us over at financialsurvivalnetwork.com. That KL@KerryLutz.com. I should say that's the email address. The Twitter feed's at Kerry Lutz. The Facebook page is Financial Survival Network. That's it for this week. John, we'll catch you next week.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports.